Millions of people wake up to a cup of coffee and also drive to their destination, and OR integrates themselves into the lifestyles of these people. Today, our team issues a buy recommendation with a target price of 17.87 Thai baht. That's a 29.49% upside from the last close of 6 February of 2026. But to first understand why we recommend a buy, we first look into the business model. Established in 2018, OR operates across 3 key segments. Mobility, in which they engage themselves with oil retail and commercial. Lifestyles, where they sell coffee retail and convenience store retail. And lastly, global, where they integrate mobility and lifestyle and take it across 11 different countries, most notably in Cambodia, Philippines, and Laos. And all together, in 2025, OR has generated approximately 660 billion Thai baht in terms of revenue, once again proving itself as a market leader. However, in the past trends, we can see that share price has been declining, which has been contributed from the negative oil industry trends and also the policies. And together, this has contributed to a negative 50% in share prices. However, don't worry, we see this as an opportunity because we see that share prices have now reached its lowest point and now we only expect an upward pressure. Dear judges, our recommendation is built upon 3 S's. Firstly, stability, in which we expect stable oil demand and market environment. Second, structure, where we expect structural expansion into the lifestyle segment. And lastly, we see Southeast Asia as the 3rd growth engine.
So for the first thesis, let's start. We expect with a stable oil demand and marketing margin. We group into 2, market levels and company level drivers. So allow me to walk you through the first one, the market level drivers. On the left side, this is the sale of the petroleum production in Thailand along with the forecasted period. This is expected to grow at around 1 to 2%. This is supported by a key demand growth drivers. First is a moderate GDP growth in Thailand, and second is a gradual recovery of the tourism, which raise the utility of the fuel in Thailand. So next is a company level drivers. This is a volume sales of PTOR. You can see this is correlates with the market trends on top with a company specific events. For example, on the point C, there are rather fake rumors happening in Thailand with OR in 2024. This result in a drop in sale volumes in Thailand as well. Also, this retail market, the mobility segment can be segregated into 2 main market, which is first a retail market, including individual motorists, and second a commercial market, including those aviations, marine vessels, household gases, and industrial usage, which the weighting would be or rely more towards on the commercial markets, almost 60%, and the rest is from retails. Next is the competitive landscape. OR has been a market leader at 35% of the market share, and also OR has been excelling in providing their product and services, which OR has been most outstanding in their brand trust and service quality. These are the results of what OR is prioritizing, which is location, service quality, brand trust, price promotions, and other loyalty programs. Also, OR has been captured some new growth factors, including those alternative energy, such as those solar rooftop and SAF aviation jet fuel.
Thank you, Win. Now, Win told you about how the mobility segment is expected to be more stable. Next, I'd like to talk about how the lifestyle segment is the true growth engine for PTT-OR. So as you can see in this chart, you can see a steady growth of the lifestyle segment. And historically, you can see that there's a 10% annual CAGR year on year for its lifestyle segment, right? Meaning that it's actually beaten the market by quite a lot. And you can see that the lifestyle segment is divided into 2 key areas. First, the other retail, which includes convenience stores and other rental spaces. Second, the F&B business, where you can see that Cafe Amazon seems to be the main driver. Next, I'd like to talk about and break down why we expect the lifestyle segment to be the true growth engine for PTT-OR. And as you can see here, so the first key reason is the main driver for the lifestyle growth is mainly because of the branch expansion, meaning that the more PTT stations they have, hence they have more Cafe Amazons, they have more convenience stores as a revenue engine, right? Now you might be thinking maybe cannibalization is an issue. However, that's not true because they use GIS systems to prevent that, right? And also, maybe a second issue you might be wondering is, can they really sustain this growth? And actually, we have already factored in a 20% decline in this into our model, expecting due to market saturation. However, we still see an upside of 29%. Next, you can also see that in terms of Cafe Amazon, it's actually the largest cafe chain in Thailand, and we see every year they're expanding by 250 to 300 outlet expansion, right? So there are two main things happening. One, market growth that is supporting this. Second, we expect OR to actually maintain its position as a market leader, right? So there are two other reasons why it's able to do so. You can see that the coffee market actually increased 8.3% last year, right? And we only expect the growth to be forward as there's consumer changes in the Thai market. Secondly, it's able to sustain its position mainly because of its affordable price point and also its premium segmentation, right? I saw that all of you are actually drinking the Select cup, right? So actually, we can see that in action as well. And finally, we can see that it's the largest chain, meaning it's the most convenience, because of which it's the top of mind brand in Thailand. And you can see that the cup sales per outlet, not only is the branch expanding, meaning that we're having more revenue drivers, it's cups per branch which is also expanding, right? Meaning that we're able to generate more revenue per outlet. Not only that, it's not only the beverages, it's the non-beverages, it's the at-home coffee market which we're expanding to. And in future, we're also expanding, we're also seeing a hotel business expansion because of which we expect more foot traffic, hence increasing revenue. Not only this, not only the top line, it's the bottom line that's increasing as well, mainly because of the EBITDA margin. We're at a historical all-time high of 28%, and it's mainly because of things such as owning our own bakeries, our own dry mix factories, our own roastery plants, and automation, which has led to a lot of cost savings. With this, I'd like to hand over to GC to talk about the global segment.
Thank you very much, Aryan. So as you can probably see from the second distance, it's very attractive, right? But it doesn't only stop in Thailand. We move to Southeast Asia. We expect the global to provide a significant opportunity for OR, mainly driven by this compound annual growth rate, which is approximately double that of the mobility segment and also the lifestyle segment. However, for you judges, you might have noticed that there is slowing growth, which is mainly due to the fact that there are declining numbers of international PTT stations. However, what is important to notice is that all sales volume has actually leveled itself, and this means that sales volume per station is in fact increasing, which suggests the fact that OR is actually able to remain resilient in such a market with external threats. But in front of us is not only threats that remains. What is in front of us is an attractive market. Where OR operates, there is GDP growth. There's petroleum expected to be growing, and also the coffee industry is expected to grow. And when we combine that with the expansion plan of the number of Cafe Amazon branches and the capital expenditure program, which is segregated into different branch expansions and also the PTT expansions, we believe that OR will be able to capitalize on this market opportunity.
Growth has not come at the expense of ESG performance for OR. Despite rapid network expansion, OR outperformed its peer with overall ESG score of 7.37, significantly above peer average. Environmental performance is a clear strength for OR. OR successfully reduced GHG emission in 2024, indicating strong readiness for energy transition. OR also built community trust with initiatives that generate income for local communities while also maintaining strong labor practices. However, governance remains a key area for improvement. We have identified two key concerns. First is concentrate ownership of PTT, Public Company Limited, and second is governance continuity.
Next, let's move on to the valuations. So, we translate 3S into on volume sold, marketing margin, and numbers of PTT station and Amazon outlets. With this key driver, we forecast our EBITDA to grow at 3.6% CAGR over the forecasting period. To value OR, we use DCF as our primary methodology, including key assumptions like WACC 8.37%, terminal growth rate 2%, and capex 58 billion baht across 5 years. And we derive target price 17.87 baht, implying 29.49% upside. To assess risk and return, we conducted scenario analysis, where in the bull case, we increased our valuation to 21.48 baht, while in the bear case, we decreased it into 14.75 baht. And overall scenario analysis suggests active risk and return ratio.
Although that some risks exist, but we believe that three of them worth mentioning in this presentation. First is commodity price volatility, makes the margins. Second is overseas expansion, is exposes to the geopolitical risk. And last is EV transitions risk toward the fuel business, which we believe has the highest severity and probabilities. Thank you for your kind attention, and now the floor is open for the further Q&A you may have.
All right, I'll start first. On the risk part, can you just now you already highlighted the biggest risk, right? Well, how would that impact the target price of OR? Can you elaborate more?
So before answering, would you like us to go risk by risk, or is there a particular
Just the
risk?
biggest one,
Biggest
the biggest risk. Just highlight that one, and then how would that impact the target price?
So this is the risk about the EV transitions. So we believe that the diesel market is still growing, but at a slower pace than the EV car. So we expect the EV car going to catch up the diesel in the future, and we believe that the structural change will be happening in Thailand. So like home charger will adopt the EV station growth in Thailand, and also the higher utilizations also result in a higher revenue from this segment toward OR. And last is the charging time that customer need to spend in the stations will lead to revenue from non-oil as well, which OR can be all mitigated, or already mitigated by this by becoming a first mover advantage in these industries.
I would like to add on one additional point, and one risk that is very apparent is like the recent events with Cambodia, right? And you might be wondering how will that exactly affect the share prices in general, because for OR, Cambodia is like one of the primary expansion platforms. And if we actually take a look into the share prices and the timeline in which this event exactly happened, we can see that from point C, when there was this conflict with Thailand, share prices did not decline. In fact, it actually went up. So that we believe that for this risk in particular, we do not believe that there could be any kind of a threat towards the share price and our target price.
Can go back to the initial risk of EV risk. How much would that impact the target price? How many percent? How many baht? If that happened, give me a little bit of scenario thinking.
Maybe we can go to any for you.
So to answer that question, our main valuation model actually already accounts for the fact that there's EV risk, right? However, we in this slide you can see that it's like the petroleum product demand is driven by especially the commercial side and the retail side, right? So we see that the EV risk translates to the retail side, and we see that in the next 5 years, next couple of years, right, there's 2.1% CAGR, meaning it's not immediate at all. So we already account for that risk. However, long-term risk, we see that there are other structural changes, but since these are over the longer term, we have not accounted that into our model yet.
Okay.
And additionally, one point to add is the fact that for OR, right, they have also accounted that towards their business model. So if we take into the account of this graph right over here, we can see that although there might be decreasing oil demand, which might be apparent in the future, we can see from the fact that the number of EV stations for OR has increased significantly by over 1,000 stations across 5 years. So we believe OR will be able to do this.
Thank you.
Okay, I have a few questions. So, a price upside of nearly 30%, that's very spectacular. So you're trying to communicate that the oil segment has stable margin, has stable oil demand. The lifestyle segment has a growth potential as well as the overseas segment, right? I believe the oil segment is the largest contributor to the overall bottom line, right? And there is one slide that you show that the CAGR, the EBITDA of the lifestyle segment jumped in 2025.
Yes.
Is that going to last? That's my first question. Second question is, what are your overseas growth assumptions? Because that seems to be quite optimistic in my view. And take that together with your ideas of stable oil demand, which is company's main segment. So where do all the growth come from? Does this come from DCF model or the relative valuation? That's my first question. Second question, how do you incorporate the ESG impact to the financial valuation? Right? How do you quantify that? That's from me. Thanks.
Okay, so okay, to answer the first question, we mainly use the DCF model, just to clear that out.
Okay.
And okay, I think we'll break it down into lifestyle, which I'll be answering, and JC will be explaining the global part, right? And also the ESG model, I think Saipan can elaborate on that. So starting with the lifestyle component, we see a bottom line improvement mainly coming from both top line and bottom line expansion, right? We see that revenue has been historically at its highest rate, and for the bottom line, we see a lot of cost savings, mainly due to automation and other expansion for their supplies.
So for the global segment, we believe that, as you probably can see from the previous, we generally see a trend in which the all volume, in general, the sales have not declined. However, you may have noticed that the revenue has actually declined, in which we can contribute that factor to the margin itself rather than OR's performance specifically.
And for the mobility segment, so the mobility segment still remain the key segment for OR business, and the traditional oil fuels still remain structurally important in domestic market. So we expect that over our forecasting period, the demand for petroleum markets in Thailand will grow modestly around 1 to 2%, which we believe that the significant growth drivers will be from aviation fuel, which we have seen for the past trend that it has been growing the most among the traditional fuels. And for OR, we believe that OR will be able to sustain its market share, while its volume sold will track the growth of the industry. So that's the reason for the mobility to be like the defensive engine for OR business growth.
And for ESG, we believe that we have indirectly already incorporated that into the DCF. Does that answer your question?
Okay, I can ask also about the lifestyle side, EBITDA margin 28%. How sustainable do you think that is? Do you see any risk for competition entering this market, impacting the margin? Also, I notice your per case, even that's have upside this risk. You don't see any event that would make it cause it to come down from the current level.
Yes, thank you for that question. In fact, we do believe that the coffee space is quite competitive. However, we believe that Cafe Amazon in particular has some important modes that are not really replaceable by other cafes, for example, right? So I think there are two main things driving, to answer your question, two main drivers. First is its mode with its supply chain, right? We already told you how it has a really big leadership role because it has a large demand, a lot of branches. They have a lot of, in their supply chain, they have a lot of their own facilities. Like they know how to source coffee from farmers. They have their own roastery plants. So we believe that it's really hard to replicate this model at scale, meaning that they're always able to maintain this price advantage that they have, right? Meaning that's never going to be an issue for PTT OR, right? So that's the first driver. Second driver is also the market growth in and of itself. Last year we saw an 8% growth, meaning that even if you say that there's a lot of competition, we believe that, okay, even being conservative, because our CAGR into the model is actually around 4 to 5%, which is below that, right? And historically they've been growing at 8% revenue year on year, like last 5 years, like if you look at the CAGR, right? So in this sense, we're already being conservative, taking into the market growth into account as well. Does that answer your question?
Sure.
Thank you.
Let's ask specifically on the thesis 3. How did you incorporate the thesis 3 into the best case assumption? C expansion.
So for the global side, right? So what was conducted was, because how global's revenue was in fact breaking down into two aspects, in which first it looks at the revenue from the PTT stations, and then there's also revenue from the lifestyle. However, most of it is actually from the PTT stations itself. And also what was conducted was, because there are no exact detailed breakdown of if it is commercial oil or retail oil, we decided to use a model in which incorporates a breakdown in which look at the correlation of number of PTT stations and towards also the number of oil sold and towards the revenue. And we made a projection based on how many PTT stations we expect there to be in the future, which is an expectation driven from the investment plan that PTT already has established. And we use that to incorporate it within the model, and then we build our assumption based on that.
On the thesis 3, you mentioned about the Southeast Asia opportunity. Then how do you factor that to the evaluation?
Southeast Asia, can you go to the slide, please? So for this specific factor, am I correct, right? So we are assuming that because there are